And that, my friends, in my opinion, is why the currencies are getting devalued versus gold or real money. And silver, of course, will participate. It's starting to participate in that exercise. Wednesday, April 3rd, 2024, Monaco 64, home of alternative economics and contrarian views. I've been getting a few messages from people, from friends, asking what's going on with gold. Why is it going up so much? Of course, one cannot assume things, but I would have thought by now, if you've been watching my channel, that you would know why. But I'm not going to assume it, and you might be new to the channel. So we're going to look at why, in my opinion, we're starting to see gold really take off and silver to a smaller extent, even though silver is going to catch up. And I'm going to refer to A Pocketbook of Gold by Jim Sinclair, where he says that gold is a revealer of falsely stated wealth. And I've gone through some figures that will show you why there is so much false wealth out there. Before I start, though, I'd like to give a shout out to the Dirty Men Safe, one of my affiliates. So with the Dirty Men Safe, you can bury your treasures, not your fears. So you can begin your security journey with exclusive perks. Unearth the unmatched protection of the Dirty Men Safe, a patent-pending marvel designed for your peace of mind. Durable, stealthy, and smart. It's your underground guardian. Sign up now and receive a special gift with your order, plus an extra 10% off via our affiliate links. Your safe haven journey is just an email away, and they will ship to the UK as well. Back to gold and silver. Of course, silver is catching up in the last day or so, and is going to continue to do so, in my opinion. So, I mean, there's an old saying about being able to keep doing something that is unsustainable. Eventually, you can't do it anymore. And I think this is where we are right now. A couple of weeks ago, I don't remember exactly when it was now, the last FOMC meeting. I made a video the day after saying that Jay Powell had blinked because he announced that he was going to slow down the quantitative tightening of the Fed's assets. He was going to slow down the sell-off of the assets on the Federal Reserve's balance sheet. And I thought that was very significant. And I think that might have been the straw that broke the camel's back. And what do I mean by that? Well, it led to a lot of people waking up to the fact that this policy of inflation and money printing is not over yet. And like von Mises said, and I'm going to refer actually to what he said here. Jim Sinclair put this quote in the book, but I want to look at something else as well. But von Mises said, there's no means of avoiding a final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved. Yeah, so I think there's not going to be an abandonment of further credit expansion. The Fed's looking to slow down its quantitative tightening, is looking to cut interest rates, and I know it's becoming more and more difficult for them to justify that, but I think that's what gold and silver are seeing. And with that, I'm going to skip to page 70 and talk about gold and why it's so important. and why gold is a revealer of falsely stated wealth. So, when wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. That depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic mismanagement, as well as the mismanagement of the affairs of state. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate, equities, affluence. As expense runs out of control, interest expenses, anyone? Guarantees to the citizenry also explode as politicians seek to retain the privilege of office. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which once bought certain things no longer does, but wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e., debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. Government passes on the mismanagement of economic affairs to its citizens by devaluation. As the imprisoned money manager Martin Armstrong has artfully stated, and I quote Martin Armstrong, yes, and he was in prison around the 08 crisis. Anyway, the decline in the value of a currency is in reality a free market tax, taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. The corresponding rise in gold, especially when it is a global phenomenon, and it is now, that's for sure, is in effect a devaluation of all the world's currencies and a restatement of wealth on a global scale. As in both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the ninth nation to do so in a 3-year period. Falsely stated and assumed wealth, largely created out of the assumption of debts that cannot be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that denominates their wealth. This happens to all currency holders regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. I'll just step in here and say many people are unaware of that. Many people just think that gold is a commodity, and that's where they're going to make a big mistake, in my opinion. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. So there you go. And by debt deflation, they mean the destruction of the value of the debt, which needs to occur, of course, because the debt is not payable. It will never be payable. So I've gone through some numbers here that I've written down to show you how, since the '08 crisis kicked off around 2007, how this falsely stated wealth has been engineered by the Federal Reserve. So let's look at the data. So if you look at November 2007, the Fed's balance sheet had $879 billion in assets. And by April 2022, the Fed's balance sheet topped at just below $9 trillion in assets. It was $8,965 billion. So just below $9 trillion. That was an increase of 920% in the Fed's balance sheet. Yes, they've done QT since then, and the balance sheet is dropped by just under $1.5 trillion, which might sound a lot, but it's only 16.5% drop from that top in April of 2022. And if you go back to November 2007, just before the '08 crisis kicked off, the increase is still 751%. So that's falsely stated wealth. And why is that? Well, because the Fed creates central bank money or reserves out of thin air. They just type it on a keyboard. So that's falsely stated wealth. I also looked at the Fed's balance sheet from November 2007 to January 2015. And why is that? Well, because the balance sheet topped at that juncture at $4.5 trillion. And then they stopped doing QE for quite a few years, but balance sheet stayed stable. And then they started doing QT. And by August 2019, balance sheet had dropped to 3,760 billion, or 3.76 trillion. And that was a drop of 16.6%, very similar to the recent drop. And I think with the fact that Powell is announcing that they're going to kind of slow down this QT, as I said, is what triggered, in my opinion, a lot of the move, not just in gold and silver, but also commodities, as you can see here by the CRB index, which is starting to take off again. So I've looked at some other numbers. For example, GDP, which includes government spending, so just keep that in mind. GDP since 2008 is increased by 97%. So nowhere near the amount of increase that we've seen in the Fed's balance sheet. And we know that the currency loses value when you create too much currency and credit out of thin air, faster than the economy can keep up with it. So I had a look at M2. M2 since November 2007 until now is gone up about 179%, so a lot more than GDP. I've looked at some other data here as well. The Fed's balance sheet, for example, back in November 2007, was only 6%, 6.12% of GDP, and now it's 26.42% of GDP. So I hope that these numbers show you how the Fed is instrumental in creating this falsely stated wealth. And Powell's admission at the last press conference that they're starting to slow down the QT and that they'll probably be doing even QE, in my opinion, in the next 12 months or so, is proof that they've got no intention of stopping this inflationary policy, and that's why gold and silver are going up. And why not before? Well, because I think investors, markets, foreign investors, sovereign countries or treasuries, they thought until recently that this could be managed. But as we see now with the national debt increasing like a trillion every 100 days, and even the CBO projecting 5 to 7% budget deficits for the next decade, which will probably be an underestimation. I think this is it. And that, my friends, in my opinion, is why the currencies are getting devalued versus gold or real money. And silver, of course, will participate. It's starting to participate in that exercise. So with that, let's quickly look at where the markets are this morning. It's 8:40 a.m. London time. Spot gold is at 22.7250. So it's down about $8. The high has been 22.88. And I've seen some people posting on X that gold has hit 2,300. You might have seen that. The reason for that is that they're looking at the June future. The spot price is for spot delivery, usually 2 days or immediate delivery. So that's the high there, 22.88. I don't think it matters. As I said, we're going to continue to see this devaluation of the currencies. Yes, in the short term, it's going to fluctuate. So that's been the high, 88. The low is 22.70. Silver is up 14 cents at 26.26. The high's been 26.57. The low has been 09. So silver is holding up well here. The stock market indices are down slightly, not much, pretty much unchanged. So are the currencies. They're not doing much. The commodities, as I said earlier, are continuing to look very good. I showed you that CRB chart, and I'll show it to you again here. It looks like we're breaking out of this falling wedge, and we're just in the beginning. And commodities, the non-monetary commodities, are also kind of revealers of falsely stated wealth, because they can't be created as easily as central bank reserves can. They have to be, they can't be created out of thin air. So WTI crude, that's unchanged at 84.80, and Brent is at 88.80, both unchanged. What about cocoa? Something that we've been looking at. Well, cocoa's kind of stabilized, even though we're still near $10,000 per ton. It was down 3.5% yesterday and closed around 9,500. And the other interesting thing is that bond yields rose yesterday. We got up to 4.4 in the 10-year. So, and I said yesterday in my video that it's going to be like the 70s. Rising bond yields are not going to keep gold, silver, and commodities down. And I think that's going to be the theme going forward the next few years. So with that, I'm going to wish you all a very good day. Take care. Bye.